The car insurance industry has seen a major uptick in customers shopping for new insurance. Let's go over why people are shopping for insurance, some of the issues that they're not quite seeing on the back end, and then what's the next steps and where they're looking to when they are shopping for different insurance. If you haven't seen any of my previous videos, I'll catch you up. There's a lot of rate increases that have happened, and that's a major reason why some consumers are looking, because most customers from 2020 to 2025, we'll reverse that, 2020 to 2025. I don't know why I have to go sideways, but most shoppers from 2020 to 2021 has seen 12+% increase. And then 22 to 23 saw about a 15 to 16% increase. 23 to 24, you're seeing almost a 15 to 20% increase. So in general, from 2020 all the way to 2025 and going into 26 and 27 and so on, it has increased approximately 30+%. You're looking some states, some areas, 50, even 60%, which seems ridiculous, but it's because these insurance companies, some of them are going insolvent. If they go bankrupt, they can't pay out the claims. If they can't take in the right premium, they can't do anything. And so in general, some companies are pulling out of certain states and some companies are somehow thriving. So let's dive in and go over some of the specifics. To make a quick summary, what has changed in the past has, from 2020, we all know what happened. That was several years. From that date, we came out and didn't know how to drive. All of a sudden, there was more deaths, there was more injuries. That's the major piece that insurance companies dislike. They can't predict how much a person's going to get injured, how much the repair to your arm is. They know how much repair to your car is. So there's a big difference between the two. And when those statistics come out of whack, they don't know what to do. So they have to raise the rate to keep up with it. Plus, the inflation, not for car insurance, but for everything else, creates the inflation for car insurance. So to fix my arm now costs 20, 30% more because the doctor bill's higher. The length of repair time and injury, they know the average length of recovering and all of those things, but they don't know the average cost of now that bandage is twice as much. Now going back to the doctor costs 20% more. Now there's 4 more visits and all the things, and everybody started suing each other. So now you're getting sued for X, Y, and Z because there's just not any money to go after except for through the insurance. Most of the time, if the policy is written correctly, you're going to be covered for those scenarios, which means the insurance, unfortunately, has to pay. And that's what you pay for insurance. You're trying to protect yourself so everything that you worked for isn't just gone in the blink of an eye. So all of those pieces, cost of repairs, cost of mechanic work, cost time to rent the car, the average repair takes longer because there's not as much mechanics, they're all charging more. There's things that add up to a bunch of stuff. We're not going to go super in depth on those, but let's just call it inflation in this case. The inflation, although you might see the GDP go up 2 to 4%, in insurance, you got to triple it. Keep in mind that most cars are newer with newer technology. The cost to repair a car has increased significantly. That doesn't change the cost to repair an older vehicle, because even those, the parts to get, start to become more expensive as time goes on. The repair tech, the repair time, and the repair parts usually don't change. So having an older vehicle isn't necessarily going to save you money unless you're not carrying the full coverage on it. When we say full coverage, comp and collision, comprehensive and collision coverage, that way if you're in an accident, the car itself is covered. Again, they're more worried about the medical claims than they are the car insurance. So when you still have a high price and you don't carry all those extra coverages for your vehicle, it's usually that you're in a location that there are more injuries or more deaths or more costly effects that the insurance is likely having to pay. Well, Mark, I can just go to a different company. You could, and there's a link in the description below if you're shopping. We can try to connect you with an independent agent that works with multiple companies, so you can do one phone call, talk to them all. That's down below. But that's not always the solution. Having that issue doesn't mean that company A doesn't have the issue over company B. It could be that company A, B, and C all have that same issue, which means you're going to pay a lot no matter who you go through. That's why shopping with an independent does make a huge difference to try to get the rates lower. That's why we're seeing a 4.7% increase in shopping. Most of it's cost that kind of triggers, okay, am I getting the right coverage? But also we're starting to realize that a lot of agents in the insurance industry don't really have a clue what they're doing. They joined it because there was some good money. Insurance is where all the money's at. If a COVID situation happens, they're still working, they're still making income. And yes, as that is true for the most part, most agents come in and they're just working at call centers. They're just picking up call after call. They don't, one, care or know most of the time what they're talking about. They're just trying to get you the cheapest deal. And if you're not familiar with this, that's what everybody's looking for. And if that's what they get, that means they're giving up something. And in those cases, you may be creating a worse situation for yourself by going those routes. The statistic that blew me away was that 41% of homeowners and auto owners are actually shopping now. And back when I had researched this, probably about a year and a half ago, it was only in the 20s. So it's increased even more than the 4% based on the statistics that I had from previous data. I'm expecting to have another increase in 2025, mainly because what you're going to see is the companies that are competitive have not raised their rates yet. And there are some companies left behind, which great, everyone switched to them because they had a cheaper deal, but they're starting to feel the pain because when you pull in a lot more customers, now you've got a lot more claims. You may be lucky and profit more. In most cases lately, they didn't realize that there was all these issues happening. Now they're paying out more. And if that's happening, they're going to see those 30, 40% increase in just one big hit. Other companies have already done that and are still competitive. So when you have the companies that have done the big hit and they don't plan on raising the rates anytime soon, that means you're going to be good with some of those company options. I've seen probably 60 to 75% of all of the companies already have the rate increases. I think going into 2025 and then 2026 and even yet 2027, we're going to see the rates get better, I guess you could say. It's going to level out. So they're not necessarily going to lower the rates, although you'll probably see a 2 to 5% decrease. And hopefully we see a little bit more, maybe even a 10 to 15% decrease if you're with the right company. Again, that's why you're working with that independent agent who can check those options, try to put you with the company that is competitive and is likely going to have a rate decrease. The other part has nothing to do with actual car insurance. It's the home insurance in general. Those rates have increased and you're starting to see more companies deny writing the homes. They're being a lot more picky. If you have a tree hanging over your house, you're pretty much out with actually half of the carriers that I know of, if not more. They just don't want to touch it. Or you got to cut the tree down. You have X amount of time to do it. If it's not done, then you just have to go somewhere else. Pulling that home policy off creates a 20+% increase just right then and there on your car insurance. So having your home save the actual house to be insured might cost your auto to go up 20+%, if not 30+%. That's one of the other pieces that we're seeing. On top of what's happening is going into 2025, we're going to see more advertisers. 2024 and 2023 were honestly probably the worst 2 years for insurance. And I say that not for the consumer, but more for the agents and new agents starting. So part of this is competition. We have to have agents out there selling insurance and trying to focus on that. But when you have very few companies that will allow new agents to join them, that creates a little bit of a monopoly for all of these larger carriers that can afford to keep it going the way that they've been going. That sense has changed. I've already seen Nationwide wants to grow going into 2025. Progressive wants to grow going into 2025. We just mentioned in our last video that Geico is announcing that they're starting to work. Actually, they've been doing it for 6+ months. They're starting to work with independent agents where that didn't even exist. You've got Safeco, who also wants to grow. That's part of the Liberty Mutual brand. You've got Farmers coming out with a home product for independent agents that are able to start selling that. Progressive is opening up their home, probably another year away from that, but if they do, hopefully it's in 2025, might go in 2026. So all these companies are starting to become more competitive and realizing, wait a minute, we need to grow. We can't just stay stagnant and just increase the rates because we're just going to lose customers. That's creating a 41%+ shopping rate, which means people are realizing they may not be a fit for the current company that they're with. Taking your profile, your liability, your risk, the zone that you're in, how many drivers you have, how many tickets, accidents, your credit, all of those things that create what's called a profile. They're able to take those, and now these independent agents are able to shop them with multiple companies. Let me know what your thoughts are. Has your price increased more than 20 to 30% in the past 2 years? If so, what have you done? Is this something that you'd start to shop for if you decided that it's become too much? Or you're just okay with it. You like the company you're with, you have the right agent, the fit's good, it might be $1,000 more a year, but in general, you're okay with where it's at. Let me know in the comments below. There is a video if you are trying to shop that will help you with the 10 best discounts that I've found. Otherwise, I'm Mark with Think Insurance. I'll see you in the next one.